Hello friends, this is Raj Sastri from Raj Option Trading. Today is May 26, 2022. Hope you're all doing well. In today's segment, we'll take a look at Cloudflare, ticker symbol NET. So Cloudflare is a leader in content delivery network and integrated cloud-based security. So they have a lot of competitive advantage. As you can see here, shared intelligence, network scale, ease of use, and so on and so forth. Stock has been down big time. It used to be a high-flying stock a while ago, but it came tumbling down mainly because it does not have a positive net margin, and even earnings are not great. So with that, let's jump in and look into this company and see if it's worth buying it here. We'll start with a quick background of this company, and then we'll look at competitive landscape and see who are the top players in the software area. And then we'll look at fundamentals and see how are the numbers, is it worth buying here. And then we'll do a quick technical analysis by looking at the chart and also by looking at the options market. And finally, we'll conclude and see if it's worth buying here. All right, now let's jump in here and look at the CEO and the company. Look, from a company perspective, CEO Matthew Prince, he's also co-founder, and he's got a nice approval rating, 75%. Not too bad. I think CEO is doing right. He's really leading the company and trying to grow the company at this point. All right, now let's jump in here and look at the numbers at a glance. Look, company started back in 2010 and they got 154K plus paying customers. That's very good. And look, they're in 270 plus cities and a lot of revenue, 50% revenue from the large customers. The revenue from large customers is increasing nicely. So that's a good story here. And they got nice gross margin, 78%. It's a software gross margin. Look, from a revenue perspective, year over year, nice compounded annual growth here, 51%. This company does not have a top line revenue issue. They're doing pretty well. And quarter over quarter also pretty healthy here, 54% revenue growth, very good. And look, from a large customer perspective, customers who are paying $100,000 or so, that's increasing nicely at a 66% compounded annual growth. That's a good number here. So overall, company seems to be doing very well. But at this time, Wall Street does not like companies with negative net margin. That's what's going on here. All right, now let's jump in here and look at their strategy for growth. Look, from a strategy perspective, they like to acquire customers. That's what you do first. Go and acquire the customer. Then you expand the relationship. Typical land and expand. They get the customer and then they upgrade them from free plan to the premium plan and also increase the usage. So this is where they expand. And then they basically provide them the new product. This is where they take them into the next category of products. And then finally, they will extend the serverless platform strategy, which is really cloud-based platform that's growing nicely. Look at their strategy here. Strategy seems to be working very well here. From acquiring to land to expand to give new products and take them to the cloud. So strategy is working very well here. All right, now let's look at this company in a little more detail. Look, Cloudflare, it's a cloud platform as the name indicates, and they have range of services. Company offers integrated cloud-based security solution. That's a good one here. They also have content delivery network. Look at the stock price here. It's $56 and stock has plunged year to date 57%, and in 1 year it's plunged 74%. That's a huge drop here. This used to be a Wall Street darling with price about $200, as you can see here. At its peak, it used to be around $220 back in November last year. Look what happened. Price got cut in more than half here. A 75% drop, huge drop, as you can see here. At these levels, we got to ask the question, is it a good time to jump in and slowly start buying moderately? And look from an analyst perspective, right now we got buy rating from analysts. That's a good rating here. We got 7 analysts saying buy and 8 of them is saying hold. So this is when we got to think and see if it's worth slowly buying up here, given the stock has suffered so much in the past, and they seem to be growing the top line nicely and acquiring the customers. And look from a hedge fund perspective, looks like hedge funds are selling companies like Cloudflare according to Insider Monkey. And according to investor place here, it's one of the good stock to buy on the dip here. I think at these levels here, it may be okay to slowly start buying Cloudflare here at stock price 56. Even though it's not profitable, company is growing nicely. They're growing the top line and the customer base. That could be a good thing for this company. All right, now let's jump in here and look at the target price. From a target price perspective, look, the lower target is 155, which is very well ahead of it's $55 and the current stock price is 56. It's just a dollar below the current price here, so there is not too much downward risk by looking at this estimation here. And upward it can go to $200. That's a good, almost more than 4 times the current stock price. And the median price is around 101. Even if it hits this price here, it's almost double from the current price level. That's why it's a good stock to buy, at least by looking at the estimate. Limited downside and a good upside from here. And from a technical perspective, look, right now technically it's sell, but fundamentally it's a buy. So I like the divergence here when the technicals are saying buy and the fundamentals are saying technicals say sell, fundamentals say buy. It's good to slowly jump in and buy slowly and accumulate. There may be some downside from here, but it's a little more limited compared to the upside potential. All right, now let's jump in here and look at a snapshot. From a snapshot perspective, look, stock price is about $56 here and market cap is 19 billion. It's a large cap company here. They have taken some debt. As you can see here, debt is a little bit high, but they have money to take care of short-term obligations. RSI 37 tells you stock is completely clobbered here. Stock is down big time. RV percentile is pretty high. That tells you could even sell some put option way below the current stock price. Next earnings is coming up in August. There's a lot of time here, so there is not no earning risk nearby. So it's good to sell some put options if you're a put option seller, but be careful as usual. Look, stock has been doing nothing. It's been going down since last 1 year. Huge drop, as you can see here. All right, now as you look through here from a margin perspective, nice gross margin. I like it. 78% gross margin. That's very good here. Net margin is negative. This is the reason stock is getting clobbered here. Wall Street does not like net margin negative. This company is showing some top line revenue, but net margin is negative. And look, free cash flow is also negative. So Wall Street also does not like free cash flow negative. So it's got some of those characteristics of money losing company. That's why it's going down here. And look, from this, it also has some short ratio, not too high, manageable. Looks like there's a huge insider selling going on here. It's a minus 83%. That's a big number. And from a moving average perspective, look, it's in a negative territory here. It's below its 200-day moving average. That tells you it's bearish at these levels here. And look, from a overall grade perspective, it's 29. It's very, very, very low here. So at this time, it's completely beaten down. And from a financial perspective, it gets a C grade from Morningstar. But from a growth and profitability, it gets a B grade, which is very good here. And at these levels here, it could be okay to slowly start buying some Cloudflare. Understand there could be some downside risk from here, but that seems to be limited. It's got a lot of upside potential. That's why it may be okay to slowly start buying this company here. All right, now let's jump in here and look at a few more details. All right, now let's look at few numbers here. These are annual numbers. Look from a revenue perspective, it's not going in the right direction. Revenue is coming down from 2020 to 2021. I mean, not revenue, earnings per share, which is not good. From a sales perspective, top line sales is growing nicely. That's a good thing here. I think companies are doing a good job here by selling its product to customers. And shares outstanding is not a big deal, pretty consistent here. This company is not diluting too much. It's slightly diluting, but it's manageable. From a gross margin perspective, still negative, but there's an improvement. That's good here. Net margin is pretty constant here. It's negative, which is not good. I like to see some improvements in the net margin. If it goes somewhere, something like gross margin here, like improvement here, that's the way to go here. Right now, net margin is not trending in the right direction, which is not great. And companies are putting on some debt here. I want them to reduce the debt level here. That's not happening. They're putting on new debt. I think they should control the debt levels here. All right, now let's jump in and look at the quarterly earnings. From a quarterly earnings history perspective, look, they're done pretty well here. They beat the estimates last time back in March. And revenue also pretty good here. Nice revenue improvement clip here. I think they're doing very, very well. Back in 2019, it was a $73 million stock. Now it's a $212 million stock. It's doing pretty well from a revenue perspective. I think it's a good growth from a revenue perspective, and they're beating on the revenue. That's always good here. So still, Wall Street does not like this company, mainly because of its negative profit margin. All right, now let's jump in and look at the quarterly net numbers. Look, from a quarterly number perspective, it's not great, as you can see here. Look, they got their sales is pretty okay here. From a top line sales perspective, company doing very well. That's a positive sign here. And quarter over quarter revenue, that's growing pretty well here. That's also solid. Earnings is negative, so that's one of the reason stock is not doing great. Wall Street likes positive earnings. This company still has negative earning, as you can see here. They got nice $1.7 billion cash, which is pretty consistent. They've been having cash for a while here. But look, they do have some good amount of debt here. Debt is increasing, as you can see here. They should limit the debt levels and go from there. And look, from a debt to equity perspective, they're putting on new debt here. That's why debt to equity is high, as you can see here. Free cash flow negative, operating cash flow negative. Wall Street does not like this, which is not good. And look, from a gross margin perspective, company is pretty consistent here. There is some slight pressure, but not too bad here. From an operating margin, net margin perspective, it is negative. So to buy this company, you got to be contrarian, because fundamental perspective, even though there is a good gross margin, net margin is negative. And company is spending money on R&D, which is always good. All right, so overall, look at the price to sales ratio here. Very expensive from a price to sales multiple. That's one of the reasons this stock is getting clobbered. Even up here, it has a high price to sales ratio. All right, now let's jump in and look at the numbers. From a numbers perspective and competitive landscape perspective, look, we got a lot of great software companies, right from Microsoft at the top here, one of my top stock. And then you got Adobe, again, a great one. Oracle, this is sorted by market cap. And look, we got our Cloudflare or Net somewhere down here. Look, it's right here. It's got overall score of 29, not too great. Net margin negative 36%. It's a big negative net margin here. That's why Wall Street does not like it. Look, from a profitability perspective, it gets a grade F from Morningstar, which is not great. And look, from a rating perspective, it gets a 29 low rating against the peers. Looks like all these industry peers are doing pretty well. That's why it gets a low rating. But from a growth perspective, look, it gets a nice growth rate here, 80, which is very good here. And from a valuation perspective, it's a not a good grade here because their price to sales ratio is very high compared to its competitors. From a efficiency perspective, think about the gross margin. It's middle of the road, not too bad. And from a financials and overall score perspective, not great. They have to improve. So that's the overall take here. I like the companies with nice and high overall score here. Look, there are a lot of stocks to buy. If you're a fundamentally oriented investor, I say don't buy Cloudflare or Net. But if you're a contrarian, you could buy this stock here because stock has gone down so much, and as we can see here, they got a lot of potential here. Their customer base is improving, net retention is increasing, so it's a good contrarian type play here. And if you want great stocks, I say stick with the high overall score names like Microsoft, Adobe, even Salesforce has got a nice score here. I love Oracle also, it's got a little bit lower score, and SAP is a good one. Intuit just announced the earnings, they're doing pretty well here. You could stick with these type of stocks here, but if you're a contrarian, it's okay to put some money into Cloudflare. This company can grow nicely, and as stock market stabilizes, this stock can go higher. All right, now let's look at the details here. Look, we got the industry peers as you can see here, and look, we got Cloudflare right here toward the end here. Look what's going on here. Companies are still losing money big time, negative net margin as you can see here, and also stock has not done well all the way from 10-day into all the way to 6 month and 1 year. So it's gone negative performance, which is not great. So that's why you should look at other great stocks with nice overall score here. Cloudflare is a contrarian play for the contrarians. It's a good pick here. All right, now let's jump in here and look at technicals. From a technical perspective, look, stock is getting clobbered as you can see here, and look, stock has done great back in 2020, 2021, right from October time frame here, back in 2021. From that point onward, stock came tumbling down big time here. Right now it's showing some signs here as you can see, but you gotta be a little bit careful given it's got a high price to sales ratio. Don't buy too much. If you want to buy as a contrarian, buy some. There is a chance this stock can go higher and can do well with this nice customer base and customer retention. All right, now let's jump in here and look at more details. Look, we got Cloudflare here, and look, they got their on the balance volume is increasing. That tells you customers are buying this Cloudflare stock here, taking advantage of the depressed price level here. And look, from a check-in money flow perspective, smart money is now flowing into the stock. That's also good here. And from a DMI perspective, looks like the blue line wants to go higher slowly, which is always good. So there is it's still in a negative bias right now. It's still bearish, but there is some sign this company can go higher with the RSI trying to go higher as you can see here. On the balance volume trying to go higher, and also DMI, the blue line wants to go higher. There is some sign that this stock can go higher. All right, AVE percentile is still high. For the folks who want to sell put option, you can go way under the current stock price and sell some put option. Look, today it jumped up by $4. Looks like companies are trying to go higher as you go forward. All right, now let's jump in here and look at the options. From an options perspective, look, stock price is about 56 here. All-time high is 221. Look at the difference here. This stock can go higher. Right now it's down mainly because of high price to sales ratio and also negative net margin. Look at the current price level here. There is a good 348 open call interest here. Look at the open interest at 130, 135. Look at the amount. Nice 10,000 plus contracts traded at 125, 130, 130 at 135. That tells you folks are really buying the call option. They expect the stock to go higher, more than $135 or so here. And there is also some volume in the put side here, as you can see here, nice volume on the put side. So this is where we have to look at the option statistics to see what is option market telling us. All right, from an option market perspective, look, we got total call contracts 10,000, total put contract 13,000. That's a bearish here. At this level, folks are buying more put options, and that's why put call ratio is 1.28. Many times when the ratio gets higher, you can take the other side and be a contrarian. There's a nice chance stock can go higher, and these put option buyers will get burnt. So that happens many times. So many folks, they will look at this put call ratio more than one as a contrarian play, and they will take the other side and buy the stock outright or buy call option. All right, now let's jump in here and look at quick conclusion. From a conclusion perspective, look, company doing great here. They had $212 million revenue, up 54%. And they also had the price target cut because when they announced their earning, it was perceived as outlook was tad softer. That's why price target cut came through and the stock came down. On the positive side here, their largest customers continue to get larger and they spend more with Cloudflare. That's always a good story here. And they also have customers spending over $1 million, and that customer base also grew 72%. That's a good one here. And they got 12 customers spending over $5 million per year. That's also great. I think they're doing very good with the customer base here. And they also have this land and expand motion here. They land with their free offering and then they expand. That's a good way here. And their dollar net retention is hitting 127%. That's a good retention number here. So overall, company is doing well. They have a solid gross margin of 78.7. That's also good here. And overall, Cloudflare or Net is an industry leader in content delivery network and integrated cloud-based security, as you can see here. And there's a lot of promise for the future. Right now, stock has got negative earnings as well as negative profit margin. So at these levels, stock is oversold. I would take advantage and buy moderately here. It's a contrarian pick mainly because it has negative profit margin and negative earnings. So that's why if you're a contrarian buyer, you could buy some here and hold it for a long time. But if you're a fundamental buyer, you have other stocks to buy like Microsoft, like Nvidia and Intuit and so on and so forth. This one is for contrarians. So with that, thank you very much. Happy investing and trading. Please subscribe.